There we go. Gosh, sorry about that, guys. Want to make sure that you can hear me. There we go. I've been having some technical difficulties with my stream, so that's why I was 20 minutes late. I'm not really sure what was happening. I had to change my stream key. I'm not sure if it was somehow bad or what was going on. Um, so I know that we're not going to maybe have a lot of live people today since they probably just thought that I didn't show. Um, but I'll still wait a couple of minutes, just like I usually do, turn on some music, and in the hopes that some people will show up. So uh, stay tuned, and I'll be quiet for the next a little bit. So yeah, it's 9:23, so about 23 minutes late. Again, I apologize for that for those of you that are showing up right now. Um, and I had some streaming problems this morning trying to figure something out. The stream wasn't coming up, so I was able to work that out. So, anyways, we'll wait for a couple minutes to get some people in, put some music on the background, and we'll start in, let's see, maybe 3 minutes or so. Okay, we'll be starting in another 2 minutes, guys. Thanks for holding on. Just want to give some people some time since we're starting at a different time today because of some issues. Um, and so thanks for being patient. For those of you that are watching, just go ahead and forward through when you hear the music. Watching this video later on, just forward through when you hear the music stop. That's usually when the stream starts, and you can. So if you want to fast forward, you can do that. Okay, so we're going to go ahead and start now. Unfortunately, I don't think I'm going to see a lot of people in the room today, but for those of you that are watching later, this is pretty much for you. Um, Watching the stream after it's finished. Okay, so again, I apologize for those not showing up, for me not showing up after on time today. Okay, so today we're going to talk a little bit about the current trades, like we usually do, and then I have actually I did write up uh, a little episode description. Okay, so today is episode 4. So this is episode 4 in the series that I started on. And today we're going to do our standard live trading update. And then we're going to talk about the benefits of basket trading. And then we're going to close with the emotions and how to better control them. So I think today is going to be pretty important because of emotions are the hardest things to control in trading. And it is probably the biggest reason why so many of us traders lose. And so I think this is going to be a pretty good episode because of that. Again, this episode will be focusing a lot on that. In later episodes, I will also talk about the emotions here and there because they do play a large part in that. So uh, let's go ahead and do the update for today. So the live trading update, what trades I'm in, and where I see them going. Okay, so I'm in a pretty big basket on the pound CAD right now. As you guys know, this is one of the pairs that I trade my strategy on, the RMI inside candle combination. And the first entry, our first entry was right here, so at this level. So you can see that there was the dip and then the inside candle that happened, is the inside candle set up here. We had a small push, it wasn't enough, and then it dropped pretty heavily. So the end of the weekend uh, was, let's see, where was the end of the weekend? It was right in here. So these are the last candles. So this trade was entered roughly about 10 hours before the end uh, of the session on Friday, and I thought that was okay to enter the trades. I mean, when I saw this happening, when I saw the dip happening, I was like, okay, we're going to be in these trades for over the weekend. I knew that was going to happen. Again, there wasn't a lot of drawdown. It was just like a 0.02% or something like that. So currently, we had the inside candle here set up. That was the initial first entry. Okay, I thought it was good. It did bounce a little bit, not enough. It dropped after that. We did have a small bounce at the 1.63 level, or close to the whole number, which is 1.63. It bounced a bit, then it fell again. Now this level has been pretty interesting down here at 1.626. Why is this level substantial, and why does it mean anything? And for those of you that know how I work things, I'm always talking about the why, because it's really important to know why you do the things that you do, so you can make sense of them. And this level down here is substantial because there was a bounce, a bit of a bounce from there, and it was the biggest bounce since the initial push down. So in this whole entire area here, which was like, how many pips is that? So about 220 pips. This was the biggest pullback in that time frame, or in that area. And it did go up. It went up to, started down there at that point, and the peak was here. Um, and it's falling back down again to that same level. Now we'll see if it bounces off of it again. So we had to push up, push back down, and then a push up, and then currently we're having a push back down. Now we're going to see if this level decides to hold again. It has already back here, here, and we'll see if it does here as well. The support is showing here, but it's not showing as it's showing as holding, but it's not showing as a real big bounce yet. And so that's something that we have to wait and see if or even when that will happen. And so right now we're in drawdown. We're in let's see, under 2% at this point. It's about 1.5%. And let's see if I can pull up my stats for you so we can look together. Okay, so this is what we're looking at. Still very smooth. 16% increase in profit. We haven't had any profit this month at 3.32. And this is our current trade. So I overestimated. We're at about 1.35% in drawdown. So that's not bad by any means. And we're just waiting for those trades to close out. So we'll see if this level holds here. There's a couple of indications that I'm going to show you why I think this level is more substantial than just even on the 30-minute time frame. So we're looking at the 30-minute time frame. I showed you that we had the inside candle set up here. We had the whole number here. We had another inside candle. I mean, a very weak one. This is kind of a those line graphs. It's not really much of a body of a candle in this on this candle. There is a good bullish engulfing candle, even with a wick, a nice reversal sign here. And then we have nothing much in this area, so nothing in here yet for indication, but I'm definitely seeing some potential bouncing candles right here. So that's on the 30-minute time frame. Let's go to the 1 hour. Let's check all these. Let's see what we're looking at. Now, just because I'm doing this on the pound CAD doesn't mean that you can't use these kind of strategies on other pairs. It works on other pairs. You just have to trade it slightly different, make some modifications. Your stop losses and take profits might be also different as well. But here's what it looks like on the 1 hour. Again, inside candle setup right here at or near the support level. Then we had another inside candle set up here with the big bearish candle, followed by the inside candle here. Then we had the same kind of indication that we did on the 30-minute time frame, a nice wick candle with the body of the candle closing above the open of the previous candle. A good indication for a bounce. Now, it did bounce there. It wasn't a lot before it started pulling back down, which it currently is doing now. Okay, so that's on the 1 hour. Still, some really good indications here and here for a push back up. I'm hoping that it's going to be more than it currently is, but who knows if it's going to push down further and inbounds. So on the 4 hour. So 4 hour, going to close out the RMI. I don't think we need that for now. 4 hour, we have multiple indications again. Really good inside candle setup here on the 4 hour. And then also followed by a good reversal candle. Again, a very big, large wick means that the push down may be stopping or at least slowing. We also had the wick here on 3 candles before that, and then a decent body of the candle. Now, when we see this kind of price action or these kind of candlesticks, yes, it means that the potential for a bounce at these levels is good. It's a good hint, but we don't know if they're going to hold, if the market is going to obey this kind of setup, and that's something that we have to just kind of wait and see if it will happen or not. And so it's going to take some time. I'm going to have to be patient. Now, one thing that you guys need to understand is that we can't always have our trades go the way we want them to right away. As humans, we're all really impatient. Patience is something that's really difficult to work on in trading because you're looking at the money. You're looking at it in drawdown. For example, like I am now, I see $84 in drawdown. That's it bugs most traders, including myself, but I've learned to deal with it by looking at a current equity drawdown. But we need to learn how to better handle those drawdowns, and I'm going to get into later how to appropriately do that, or give you some advice on what I do to handle those emotions when I am in a drawdown or even in profit as well, without closing out trades too soon. So let's go back to my 30-minute time frame, and this is what it looks like right now. We have 1, 2, 3, 4, 5, 6, 7 basket trades in. Now, the reason why I'm not in that much drawdown, we're talking about 1.3% at the current time, is because these trades are at 0.03, which is really low risk for a $6,590 account. I'm also trading the euro pound. We just have 2 trades in, 1 and 2. The entry on this one is on the 1 hour time frame, and we have the inside candle setup here. So we have the bullish large candle followed by the inside bearish candle setup, and then the small push down followed by a launch back up. We entered on a 20 pip grid, so this trade is the second trade is 20 pips from the first one. So in between here to here, 20 to 20. And right now, we're also seeing a bit of a resistance up here. We're seeing some resistance up here, up at the top there. And how do I know this? Well, it's not too difficult to see that that's happening. Okay, first wick candle showing us an indication. Bearish engulfing candle here. It didn't move down at that point, but after that, we did have some other candles after that also had wicks on the top of them. And the current candle that looks like it may be showing that same resistance level up there. So that's how I know that price is slowing. Now, it doesn't mean that it's going to not continue to go up. It could still continue to creep up, but it also could fall at any point at any time. And that goes for the pound CAD. Now, typically the pound CAD and the euro pound are uh, correlated, have a reverse correlation. Um, so when this is moving down, the euro pound is likely moving up, right? And that's not always the case, but in most cases it is. The euro pound is a lot less volatile, so the move up on the euro pound is a lot of times not even half or half of what the pound CAD gives us. So, for example, let's see the peak. The peak to the bottom is 234 pips, and that same kind of bracket of time, peak to the top is only 140, so not even half, or just about half. Okay, so this is what we're looking at right now. I'm gonna have to wait a bit of time before we can close out. Now I'm looking for 50 pips amongst all these trades, so total. Okay, uh, and what that needs, where does that need to go? I need to go to about 63.2 is what I would guess. So in this area, maybe a slightly higher, um, in order for us to close out with 50 pips. I got really close already. It bounced off of that level, but it wasn't quite enough. So I'm going to need another bounce here. I'm confident that there would be a bounce here. I'm not going to be freaking out if it does fall lower. There's always that potential there. The next support level for this trade, and something that you can follow along. Now, again, just because I'm trading on the pound CAD doesn't mean that you can take this you can take this advice and use it for other pairs. So where's the next level of support? Well, there's a couple of them. Well, pretty much one I'm looking at is at the 62.3 level. Now that's pretty close to where we are now. Currently, we are bouncing off of the 63.6 level. So even if it does go down to the 62.3, it could still bounce off that level, which means that we're still getting this area of support, which is anywhere from 62.6 all the way down to 62.3. So we have about 30 pips of a bracket in there that the price could reverse at any point, or really any time above the 60 this level or where it is currently right now. So we'll just have to wait and see. All right, so enough on the trades that we currently did that were on the live trading update. Reason why I spent a little bit more time on it is because we do have more trades in, and I think it's necessary to explain why we have those trades in at the moment. We're gonna hit another trade in 20 pips up. So right now we're at 10, about 10 pips. So another 10 pips up, another trade will execute. All right, so let's hit on our next point, which is benefits of basket trading. Now you've heard me talk about the trades that we're currently in, and the reason why I wanted to talk more about basket trading is because today is because of how many basket trades I'm in right now. We're in, did I say? I think I just said 7 trades. So 7 trades, and a lot of people might think, oh, why are you doing this? Why are you trading like this when you're basically betting against a losing position? Well, there's a lot of reasons for that. One is because, yes, this could be a good entry point on multiple levels because we see the support here. And we see the support, and we see that this is at barely just above a new higher or lower high. So this is a good place for it to bounce up and break the swing level up here and then continue. So this would have been a good place for a lot of people to enter and in the hopes for it to bounce. Well, that didn't happen. It doesn't, price doesn't always do what we want it to. And it fell a lot further from there. So I could have closed out this trade. For those of you that are taking stop losses, a decent place to close out the trade would be somewhere in this area, just below the swing level of the price. So that's around 63.3, and that would be a stop loss of about 36 pips. All right, I'm not too interested in doing that because my understanding of the pound CAD and all the testing I've done on it is that it's a big ranging pair. It has big moves. It's volatile. Okay, it is very volatile, so it can be dangerous depending on how you trade it. But it does have these big swoops in action where we have a push up, we push down, potentially push down, and we are able to profit when we hit those swing levels. And if we're not quite right, if we're entering trades that start here, here, and then eventually it will reverse, then we come out with profit from all these trades at some point. So we don't always get the reversal point right, and that's why I basket trade. I basket trades because I can't always guess the right zone or place to enter trades, even though price action looks really good at those levels. And I have lots of reasons for taking the trades that I do, especially the first one, which was in this area. All right, so the next areas that I do is my EA. This is an EA that's trading this account for me. Using my strategy. Now, typically, I'll look for places in the market to do reversals. So I'd be looking here. This is my first entry point. And then if I was trading it manually, I'd be looking here. Number two. Number two. Why is number two there? Is because the whole number is there, 6,300. 0.6300. And he did bounce there. Again, not enough buying pressure on the pair to shoot it up. There's too many sellers in the market at this point. For it to really, for these places to really have a large effect and for it to really bounce off of them. All right, so order 1 would be there, order 2, order 3 is down here with the inside candle setup. I wouldn't enter in here, even though this is a good setup candle. I wouldn't enter here because it's too close to order 3. I want there to be space from order 3 to order 4. So that means I want it to go down further in order for me to enter an order 4 below that. And that's how I would approach the market. So because of this order here, I wouldn't enter another one. I wouldn't enter order 4 there because then I would be in too deep at this bottom level. And if it continued to go against me, that's not a good play for basket trading. So why so many trades? Why so many open positions? Well, it's because when that pullback does decide to happen, I'm going to be out at the earliest time. Now, if I would happen to enter at trade 1, trade 2, and trade 3, all right, I might only need about the same amount of pips in this case. It would need to go to about here in order for me to come out with about 50 pips profit. Okay, so in this case, manually trading would have worked out pretty well, but my EA is also going to be able to close out at the same level. Now, from my experience in testing, the EA actually is very beneficial in this case because the closer that your orders are to each other, so I'm having 20 pips from order 1, order 2, 20 pips, order 3, 20 pips, and so on and so forth. So on a grid, the closer they are, the more likely you are to get out of trades sooner when that pullback does happen. So that's why I have them pretty close together. 20 pips from each other. And the EA has proven that methodology or that risk management or money management works very well over the longer term. So that's why I have the 20 pips. Now, when I'm live trading it, it's a little bit different. They both show different results, meaning that in some cases, if I'm live trading, I may get out of some trades earlier. In some cases, I might have to wait longer because my grid is a lot larger if I'm manually trading. Now, if I was going to enter those trades, that means that my grid would be 60 pips from order 1 to order 2, and then another 46 pips from order 2 to order 3. So I don't technically only have 3 orders in. Drawdown would be less because I have 3 orders in compared to 7 that you see here. So my drawdown would technically be less in this case, but a lot of times I actually need more pips because of the I don't have as many orders in. The more orders I have in near the bottom of that push back up, the faster I will be able to get out in profit. So I'm hoping that makes sense to you guys. If you guys are not basket traders, I'll continue to talk about this in my streams until you get the idea, because I see a lot of people basket trading. In most cases, the successful people that I see on either MyFixBook or some of the tracking sites out there, most of them basket trade in some in some way or form. At least the best traders that I've seen basket trade. There are a few out there that are able to uh, trade with stop losses, just one single trade with a stop loss and a take profit. Um, but that's very difficult to do. It's very difficult to trade like that because you could have multiple losses in a row, and looking in the hopes that you'll be able to make back those losses with one big profit trade or a few in the row. So it can get a little tricky. All right, so that's why I believe that basket trading is important. Why it can be beneficial is because you don't have to be really, really accurate on your trades, and you can have some give them, so some space to let them breathe, so you can come out in some profit. Okay. So that's what I have to say about basket trading, at least for now. And if you have any questions, please write in the chat box uh, here on the stream, or you can even say some things in on the Forex Factory, where I have my stream advertised, I guess. Okay. So the next thing that I want to talk about is the emotions. Now I want to start. I'll probably talk on this for about 15 minutes or so, depending on how much I feel like is necessary to say about it. So hopefully I'm not boring you guys too much right now. But this stuff is really important to understand. Um, and it does affect all trading. It's not just trading on one or two pairs like I do. You know that I trade the euro pound exclusively and the euro pound and the pound CAD exclusively. Okay. So emotions tie into all trading. And when you have to, number one on emotions and how to battle them is to trust what you're doing. And when I say trust what you're doing, I mean by trusting your system, trust your ability, and trust your risk management. In order for that to be, so you have like something to fall back on. If a trade goes into drawdown and you see it in the negative, you won't get emotional if you trust uh, that if it's a loss, you'll come out of it with the next trade. But you'll have a better opportunity to make that loss back, or trust that it's just going through a temporary drawdown phase and it's going to bounce back up. And Or you could also you trust that it's just part of the game. If you think that, if you understand that part, it's much easier to realize that those periods of drawdown are just temporary. And as long as you're thinking that, it can help a lot. It can also cause more problems potentially too, because if you trust your system, but it's not that great of a system to begin with, if you haven't done your due diligence and put enough testing into it, then you're trusting a system that can be harmful to your trading, especially if you trust in it a lot. And I see this happening a lot of times where somebody is overly confident and they put too much risk on their strategy, and things go south to them. And they don't have anywhere to really bounce back because they put too much risk on it and they were too confident uh, in the results or the potential results of what they were trading. All right, so we need to trust what we're doing, but that trust can't be blind. It needs to be something that you need to be able to grab onto something, um, whether that's a knowledge or aspects of trading that can give you that edge. And how to get that edge, I've talked about in my streams before, and that's to test your strategy in a specific way so you can gain confidence on it, or by using it, either in the future or even in the past. You need to see if your strategy is successful now, and see how successful it was in the past. I talk a lot about personalities of currency pairs. Each of them has their own personality, and it's important for us to kind of study how those behaviors are on those currency pairs so we can better develop strategies for them. And in order to do that, you need to check your your history. You need to check the market, what it's doing. Market with like you can even mark it with an epic pin like I do. You can do it that way. You can also mark it on chart. Um, and I mean, there's MetaTrader has tools too that you can mark things with. But you also need to see where the price is going, why it's doing what it's doing, and make adjustments. So like I talked about in my last stream. Why did price bounce from here? Why did it move down? Why did it use this level here to reverse? And you need to try to find hints in why that happened. Look at the price, look at the candlesticks. If you have any indicators, look at them to see if they can give you any hints on why price did what it did there. Why did it bounce here? Was it a news statement? Was it just pure technical trading? You also got to find out what the news is doing so you have a better a gauge of how to play out your trades. But it's important to look at the history to see how your strategy has performed in the past, because then you're starting to gain a background of the pair and gaining its personality and how it's behaved with your particular strategy, which will better gauge or allow you to gauge how to appropriately uh, use your tools for that pair. When I say tools, I mean like if you're using support resistance, if you're using a certain indicator, if you're using candlesticks like I do. So there's multiple things that you can gain uh, from back testing your system. So many people have the problem of blindly just going into trading and saying, "Oh, I've had a whole month of forward testing on a strategy that I found online, and it's been great. I've had a lot of profit." So you get false hope that this strategy is going to continue that way, and thinking that it's so good, but you didn't do. What if that person that has had really positive results over a month hasn't done any back history data before he or she started testing the system in forward testing? Well, it could continue to be a successful system over the course of the next coming months, but it also could really fail the next month right after that, because you don't know how large or what span of time that strategy has worked. Um, and the longer that it's worked, the better off you are on having success with it. At least that's what I personally grab onto, because then you've tested the strategy on multiple years, different the lifespan or a large portion of the pair's lifespan, so you have a better idea of how to approach it. All right, Martin, or yeah, Marin. Says, "Hi, I have noticed you are always trading the pound CAD. Is there any particular reason you are trading that pair rather than one of the other majors?" Sure. Yes, there is a very specific reason why I'm trading the pound CAD. Now, in my streams, and this is stream 4, I uh, I used to trade the euro pound exclusively. So if you see my trading results, so most of these trading results have been the euro pound. So if you go to summary, you'll see that I've had 27 trades on the euro pound since November of 2016. 27 trades, and you see the pip amount, total 721 pips, profit of $148, excuse me. Sorry, longs, I had 27 longs. Total trades is 55. So 55 on the euro pound over the course of 4 months. And you see my win rate. Now you also see that I've taken a couple trades on the pound the pound Australian dollar. That's also a pair that I'm looking into, maybe trading in the future. And then on the pound CAD, I've had eight trades, and I plan to trade this pair as much or potentially more than the euro pound because I see more profit with it. The reason why I trade these two pairs is because I have an EA. Let's see if I can just show you this. So my EA is an RMI. It's an RMI EA setup. And so it uses the RMI indicator for overbought, oversold conditions, and then I have an inside candle set up that you've seen already that I pointed out numerous times. And I need to select the pound CAD. The reason why I trade these pairs is because they're heavily ranging. That means that they range a lot, up and down, and there's always some kind of pullback that happens. So let's give you an example of that. Okay, so we had a push up, push down, push up, push down, push up. So there is some kind of a substantial pullback, and the reason why I like the pound CAD is because that pullback is usually a lot more volatile, and I can get enough pips in that pullback in order to come out with profit. Now I also trade the euro pound, and typically I have the same kind of idea where we have a push down, and then there's the pullback, and then they continue push down after that, right? So that pullback is where I'm banking on happening. And as you can see here, I didn't in this scenario, I didn't quite get that pullback right, but I had trade 1, trade 2, and trade 3. Trade 3 is when it decided to reverse. We got the pullback, and we were in a good healthy spot at the bottom of that push. So it allowed us to get out pretty early before this actually decided to return it in reverse. So the euro pound does the same kind of thing as the pound CAD, but the reason why I am really interested in this pair is because it does it on a bigger way, on a more volatile scale. So that means that a push like this is pretty substantial. It means that we might have a lot more trades in on the pair, but we also come out of the trade a lot sooner off of those pullbacks that happen on a more volatile basis than on the euro pound. That means that trades close out likely faster or sooner than they do for me on the euro pound. And it also follows the price action pretty well, meaning when we do have an inside candle setup, it does happen to push, maybe in some cases a little bit more frequent off of those inside candle setups than even the euro pound does. So that's why I trade these pairs. And you can see it just even on a smaller level, push up, push down, push up, push down, push up, and then a bigger push down, but then also a bigger recovery or pullback, and then a shoot back up, pull back here. And so that's what I'm looking for. I'm looking for these pullbacks. I'm looking for the areas. A big push. We break the high of this previous high was broken, and it creeped up. We pulled back down. We actually had an inside candle set up here. Let's see if I can load that on chart. Let me see. Let me see. Oh yeah, there it is. Okay. Okay, so I can find two of the trades. Oh, there it is. Okay, there's the third one. Okay, so this is what I'm talking about. I mentioned that I was looking at this area for that pullback after it pushed up, made a new high. Then we entered trades on inside candle setup, and then again pullback happened, and it shot back up, made it hit that same level, pushed back down, and shot back up, hit that same level. Actually broke at that time, pullback, and so on and so forth. So that's what I'm looking at with this pair. Now, how did I find this out? How did I find out this pair did this? Is because I do have my EA, and I use it as a tool to see how many times this has happened in the past, and how accurate this kind of setup is over a long course, a large course of time. So you can see here, this is what the EA does. It's on a 20 pip grid. At least I think the settings are correct. And you can see that, yes, we do have places where let me pause it. Places where we do have multiple trades in setup. You can see here, see a lot of trades, but we have a stop loss in place, which is pretty substantial at 500 pips. But all the trades are able to close out with a small cutback. So look how many pips are in this bracket. Let me show you. So from the top to the bottom is 350 pips, but we only needed 160 pips from the bottom order to where the trades exited. So we only needed 160 pips in order to close out all positions in profit. So all these were closed out. Yeah, not a ton of profit, but 50 pips. It means that we protected our account from substantial loss because we held on to them, we gave them some space to breathe, and then we only needed a 160 pip pullback in order for us to close out the trade, the trade in a profitable basket. Same situation here. Now these are larger than normal basket trades. All right, they're not always going to be like this. These are what I consider the worst trades in some cases. Here's another one. This trade went against us 350 pips. All right, and with not a lot of pullback in that whole time frame. We had a couple of them here. We had one here, a small one here, this small one here, but they just weren't substantial enough. And eventually, it did move up, and we were able to close out. Now, 350 pips drawdown means that we only needed from the bottom order, we again only needed about 175 pips for us to close out that trade in profit. Okay, so I hope that makes sense on why I take the trades that I do on these specific pairs, is because this kind of personality is what I can expect. And if it doesn't work out, and this continues to go against me, if this pair continued to go down, we didn't get this pullback that I needed here, and it continued to go down, then I would start pulling out trades and in loss, and I would start accepting that this pullback that I'm looking for, it happened here, but what if it didn't? It's not going to happen on a basis, and so I need to accept this trade as a loss and start looking for other opportunities. So we have some other questions coming in. Ryan, any reason why you don't put a stop loss in once you're in profit, to then let the profits run without any risk? It may then carry on in the right direction for days. Okay, good question, Andy. Thank you. Yes, my EA does have that in place. Now, let me stop this for a second. If you look at my options, let me see if I can pull them up. So you can see where my levels are. So the RMI, it uses the RMI indicator here, as you can see. And I have the settings of when to enter trades on the buy level and sell level. But the thing is that every trade has a built-in 500 pip stop loss. So that means that every trade will enter on the will have a stop loss in place just in case it hits that level. Okay, so next you see my 20 pip grid. You see a bunch of other options that I don't necessarily use, but then here's the one that I wanted to talk to you about, was the use trailing stop. Now I can use a trailing stop on all my orders, and it allows me to ride the trades out longer than I typically would. I found that a trailing stop works well on the pound CAD if it's 20 pips. So 20 pips, if I do 20 pips on both of these. So that means the trailing stop start means that when market moves up 20 pips, that means that we will come out at break even. And then trailing stop step, 20 pips pushes above that, so on and so forth. So it's a standard trailing stop. It was very difficult to implement because of how many orders we do. The trailing stop is difficult to implement on basket trading strategies. And it works, but the thing is that there's more drawdown with trying to squeeze out more profit on the trades. That there is more accuracy, less drawdown, even more profit by having a straight 50 pips take profit on these positions. Now, a lot of you guys have learned to try to let your profits ride out, and I have never, in my experience, in my testing, now I haven't just tested the Euro Pound and the Pound CAD, guys. I've tested all the major pairs in a lot of the others as well, and the crosses. I mean, a lot of the crossing pairs. And the thing is that I haven't found why trying to make profits run is beneficial in my testing. And so that's why I usually will have a set take profit amount, because let's say that the market moves 20 pips in our favor and we have a trailing stop. What if it moves back down right from when that trailing stop becomes active and we come out at a break even? I don't like that idea, because that means I just missed out on 20 pips. And you can do the same thing for a trailing stop. If you have at 50 pips, let's say you have a trailing stop at 50 pips. Or you decide that you want to have, you're going to move your stop loss to 20 pips take profit when the market goes 50 pips in your favor. That still means that you're potentially losing out on 30 pips profit at that point. I just don't like to worry about the trailing stop and trying to make and trying to squeeze out that much profit on trades, because in the end, I'm likely to lose more in the longer run than I am to gain. That's my insight on that, and that's what I've seen in my testing. And I've tested 24 years on the euro pound on multiple EAs, and I've been working with the euro pound for now over 3 years. I've also tested strategies on trending strategies on the euro US dollar, pound US dollar, and many others on trending strategies, letting profits run with using trailing stops and so on and so forth. And it never works because the stop loss is always because the stop loss is a set amount. Uh, is it's hard to work with. If you had a variable stop loss, it might have a better effect. But the thing is that you're still having here uh, with a uh, with a system. Let me see if I can pull up. Okay, so for example, I have a black. So if you are looking at the chart and it's doing this, right? And you have stop losses in place on your strategy, and you're trying to gain. You're entering the trade here at the bottom, and you're hoping to get as many pips as possible on the way up, right? On the way up. But so you're letting your profit ride. But the thing is that you just don't know how far it's going to go, when it's going to pull back, because pullbacks always happen. It's just not proper trading strategy for me. I don't think I'll ever actively use a trailing stop, even though I keep trying. I keep trying to make it work. I just haven't been able to find something that makes sense. Okay, some more comments coming in. From True Story, hi, first time here. Just wanted to show you support on your journey. Oh, thank you. Can you explain your EA, what it does, and if it's available to the public? Sorry if I missed it. You can explain it later when someone else asks. Don't want to repeat yourself to me for me. That's okay. True Story. I have explained my EA in the past and how it trades. It was for sale for a limited amount of time. I decided it was too good to sell to the public. I was selling copies for $400 or something like that, back a couple months ago on eBay, and I took it off. I did sell a few copies, um, and I'm still in contact with those individuals. I took it off though. I feel like the trading strategy is too valuable. Um, I can go through the entire pound CAD's history from, well, at least that I can pull up from 2007 on, so about 10 years, uh, without any big losses, with profitable trading history. In some cases, I was able to turn a $6,000 account in back history to 3 million. I mean, it's not very attainable or usable information, but it shows that the strategy is very profitable on that pair, and I can utilize that. I've also tested over 24 years of history on the pound, the euro pound, all the way back to 1998 is where I can pull data from, and and it has a successful history all the way to the current date. In some cases, no losses, and that what that looks like is something like this. Let me see. I've showed this before, and so sorry for those of you that are watching, and have already seen me show this. So this is just a 16-year test that shows the equity curve and balance curve over the course of 16 years. It shows you the profit percent, the profit amount. I'm not really interested in that. What I'm interested in is the curve of the balance and equity. So that's the kind of stuff that shows me a profitable strategy. Now I can either choose to use the EA, or I can use it as a tool, and I tend to do both. I use my EAs that I create as tools and for live trading. As you can see here, I'm trading it live. And by the way, we're going to give you a small update. Right now, we're getting a little bit of a push on the pound CAD right now, and it's turned my drawdown that was $85 a while ago back down to 38. So we're looking pretty good. So what I do true story is something a little bit different. Is that I don't give away my EA. I don't. It's not. You can't buy it to the public, um, at least not right now. But I am telling you exactly how the EA trades, um, and how the strategy works, and how you can trade the same strategy what my EA does manually, and by only spending, guys, you only have to spend like 10 minutes a day to do this. And I mentioned this already. So my EA, as you can see, has put in seven trades, right? Which is kind of a lot, but that's one way that the EA is able to trade it. You can also trade this strategy manually with similar to maybe a little less good results, but very similar. And you trade it very like with the stop loss on the trades as well. Same take profit as my EA does, which is a basket of 50 pips. So you'd have trade one here, trade one. Trade two at the whole number. That's how I like to trade the strategy manually. So we're putting them in at 1.6300 at the whole number. So that would be trade three. Trade four would be at the bottom here with the inside candle set up at 62 near 62.6. And then we'd look for the take profit level, which would probably be around 63.2 for all the trades to close out at the same time. And you have to do the math. You have to do the math on your trades. You either get it out of calculator. There's also an indicator called, let's see if I have it here. I think it's called break even, something break even. There it is. NBI break even. So this is a pretty cool little indicator, and I'm actually going to load it on now. Gotta remove the one-click trading. Okay, so it shows you the trades that you're in, and it shows the negativity, which is pretty helpful. And it shows you your current drawdown. It shows where break even would be on each pair. So it says 63, 6300, 63,099. But that's actually including the euro pound as well. So it's not quite as accurate as you would like. You could set it to those profits, but it gives you a pretty good idea. So if you were just trading one pair, it would be a lot easier to work with this indicator. But it's a really good tool to help you know where you should be looking at a potential take profit area for your trades. Now it says 3100, which would be right here, which is not technically right, but like I said before, it's including the trades on the euro pound. If you put the pound to the same profit level, which is what it's saying. With 85, 138, 85, 138. So yeah, so it's right in this area here. Okay. So it's including that pair, so it's not, I don't know if you can adjust it so it only works on one pair. Maybe somebody has this indicator already. I don't think it does. So, but it's still a good tool nonetheless. All right, so I'd basically tell you how to run this strategy. And a way to do this is to calculate the profit. You could also mark it on chart. You say, okay, well, we have 7 orders in. So we know that it's likely that 4 of the 7 orders need to be in profit in order for us to close out of this basket profitably, right? So I marked it where I thought that there might be a good place for us to profit. Means that 4 of these orders are above, and then the 3 up here will be in loss. And as we know, we have to have the majority in profit. And so this is probably a pretty good guess of where we would be taking profit on these trades of about 50 pips or so. It might be a little bit higher, but that's something that you'd have to work out. So what you do is you take out your little tool. You grab, you could do it this way. This is a very slow, or a pretty slow way. And you grab from the bottom to the top, or from the top to the bottom, 73 pips. You get the calculator out, or you just do the math in your head. 50 pips, and then 30, and then you can continue from there. And you just have to do that on all of them. It's kind of a hassle. That's why this break-even meter is pretty cool, is because it can help gauge a little bit better of what you're looking for. And that's another reason why I have the EAs, so it can just do the math for me. It does make it easier. But remember that in this whole basket, when the EA has 7 trades, a manual trader would only have 3. And so it's much easier to do the math on 3, so you don't have to whole add and subtract all that kind of stuff, right? At least not as much. All right, so we have another question. As long as you remember to switch it off in news events. Okay, so Andy, that's also another good question. Now, you guys know that robot traders or EAs have trouble during volatile markets. And Andy may know me in the past because I did lose some money back on election night because I left on a scalping robot of mine. Now that scalping EA that I had is very particular, and it also is very dangerous too. You can't leave it on during the news. Anything scalping means that you're looking for small market moves at higher risk in order to profit. And as you guys know, during the election night, there was massive volatility and very unknown circumstances with what was happening that night, as Trump, won the presidency. And so it was very tricky night, and I accidentally left on my scalping robot, and it was literally an accident. I went to a friend's house, and the rest was history. I ended up losing about 60% of my account or more. It was a bad night. It was the biggest loss I had in 3 years. It was very sad, and I moved on from there. It was an eye-opener to me to not be careless in trading by leaving something on. And I even remembered, I was like, shoot, I left it on, and I can't believe I did that. That's so stupid. There's no reason why I would do that. It's just carelessness. It's just I just forgot that it was on in the background. And the robot doesn't have the EA didn't have a news filter on it, or at least a good one that I could trust. And so I lost because of that, and I lost a good amount of money too. It was very unfortunate. So this EA, how is that different? It's not, well, for one, it's not a scalper, and so it looks for larger market moves. I can withstand, 500 pips or more on a push, and so I can leave this on during all types of news. But if there's something pretty dramatic happening, like a Brexit vote. There's potential that I may turn off the EA until something is decided, just in case there's a large volatility in the market. But for most news, I'm able to keep this on in the background pretty much all the time. Okay, so true story. So you keep buying. Sorry, that's the name of the user. Excuse me. So you keep buying basket trading when it goes against you. What triggers the trade for a buy? After you have 3 or 7 or whatever trades, what is your take profit? 10, 50. Yeah. So my take profit can be maximum 50 pips, but anything under that works for my trading strategy on these two pairs that I trade. So the euro pound and the pound cat. Um, so 20 pips works, 10 pips works, 15, 5, 20, 30, 40, 50. But anything above that, I think it's pushing too much, and I won't shoot for that high. Also, like I said before, a trailing stop on the pound CAD works for 20 pips. But I found that I was able to profit more in the longer term by using a straight 50 pips profit level. So for those of you that are wondering why I don't write out my profits, that's the reason. It's because I saw more profit in the longer term by having a set trailing stop amount. Now you're probably wondering why not have a 50 pips trailing stop? Because I didn't see results really good in that yet. I'm still testing it. I'm still trying to find out why it's not as good. Why is a trailing stop at 50 pips not as good as a set take profit at 50? And I think it has to do a lot to do with what I said before, where we lose out on pips, potentially 50 pips if the market reverses right when our trailing stop becomes active. So yeah, you can use anything under 50 pips on these two pairs. Now this strategy doesn't work very well, at least in my experience, on pairs like the euro US dollar. Now, why does it not work that well on this pair? Okay, so we're going to get into that now. It's the same thing with the UJ, and I think this is a pretty good example. Okay, so if we're looking here, the top to this bottom area and then this pullback, right? So we're going to look at the price from this bracket to here, and that is how many pips? Okay, so it's 300 pips. there's something that you should notice in this, that the pullbacks, yes, there are always pullbacks. That there's a push, pullback, push, pullback, push, pullback, push again, break at that level, pullback after that, push down, pullback, push, push, and then pullback. Okay. So whenever there's a push down in some way, there usually is a pullback. Its problem is that we don't usually know where those pullbacks are going to be. That's why I use candlesticks to help guide me with that. The issue with the euro US dollar is that these pullbacks are almost all cases are too small for us to really utilize this strategy on the euro US dollar. I need a larger pullback. And in some cases, because the euro US dollar is driven so much by the fundamental news, that these pullbacks are not very substantial, and they don't make a lot of sense for us to trade the strategy. I need pullbacks more like this, and I just don't get them enough on the euro US dollar, unfortunately. And it's the same thing on the UJ. You'll see areas in price where it's too smooth of a push down. Again, like right here. Look at this, for example, the swing level, all the way down to this swing level here, which it did have more of a pullback at this point. But this was such a smooth move on the way down that there wasn't much of a pullback. Okay, I can see a few of them here, here, and here, but they're not substantial enough. And we, as you know, we do need them. They do happen, but in most cases, there's too many pips that happen in between here to here before we actually do have that more substantial pullback. So the strategy is a little bit more dangerous on these types of pairs, including the UJ, the pound US dollar, the US dollar Swiss franc. Although better than the euro US dollar, it's still a similar kind of situation. And so that's why I use the pairs I do. Okay, let's see. No more questions at this point. We are at about the hour mark. This is typically where I try to end my stream, so I'm not talking all day, so you guys have an ending to something. And today, again, we talked about these things. Episode 4 was live trading update, benefits of basket trading, which I've talked about throughout, and the emotions. And this is something that I'm going to continue to touch on because it's something that I feel like most traders need to practice on understanding how to better work on them. Because even if you get training with somebody in a stream or mentoring, a lot of times they don't talk about emotions and how to correctly work on those. And that's something that is completely necessary. So I think that's it for today, guys. And I'll follow up with you on today's Monday, on Friday. So we'll do another stream on Friday, and we'll start at the right time this time. Hopefully, I don't have any more technical difficulties. So it'll be 9 a.m. Eastern Standard Time on Friday. Let me just double check if I'm here. I am not here. Never mind. There will be no stream on Friday. I'm out of town. I'm actually going to be in New York. My group, my piano group, the Five Browns that I play in, actually has a documentary is being released about my family. And it's a showcase out in New York that I'm going to on the 3rd. So I won't be here. So I will be following up again with you guys on Monday, the 6th. So keep that in mind. Monday the 6th at 9 a.m. Eastern Standard Time. And I'm not really sure what GMT that is. But I'll see you again, and hopefully we'll see these trades close out. I'll give you an update on my Forex Factory thread. Search Cubby Be Good on Forex Factory. If you want to see the updates, I'll send you a picture of how this closes out and where it closes out, so you can get a better gauge of how these trades turned out. All right, thanks so much, guys, for watching, and I'll see you next Monday.